Hi, everyone. Welcome to the latest Take 5 with Ryan and Sonu. Obviously, by now, we've all seen the terrible news coming out of the Middle East with the war. Our hearts go out to everyone. Our prayers go out to everyone. Let's hope, Sonu, that we can find a resolution very, very quickly. But Sonu, today's Take 5, we're going to call it War, Oil, and What's Next. Obviously, investors have a lot of questions about the potential impact of all the different pieces that's going on right now. So we're going to start real high level, Sonu. I'll go first and then turn it over to you to talk a little bit about oil. As devastating as the news is and what's happening overseas, when we've taken a look before historically, the honest truth is we're going to have some near-term volatility. Absolutely. We'll talk about that with oil here next. But the truth is also you can have a continued bull market. You can have kind of a market that kind of ignores the terrible news that's happening if the underpinnings of the economy can remain strong. I mean, Sonu, for instance, a year after JFK was tragically assassinated, stocks are up almost 23%. A year after the Cuban Missile Crisis, up 29%. I took a look when Iraq invaded Kuwait, as horrible as that was, and the impact that had, obviously. Stocks are up over double digits a year later. So we're not minimizing what's happening overseas. What we are saying from an investments point of view, any near-term volatility, if the economy and underpinnings are still strong, like we think, we've been talking about that a lot on these weekly videos, we think, it could be an opportunity for investors. Now, Son, I'm going to turn things over to you. Obviously, paying at the pump, right? Higher oil prices. That's what we've seen initially. How much does that impact the overall global economy? And is the U.S. really as dependent on international oil, specifically from the Middle East, as we were, say, in 1990?
Or even 2005 for that matter? Yeah, no, short answer is no. We're not, right? That's an easy way to put it. And that by the way, that's the end of Take 5. No, it's not. But look, the reality is that anytime you hear, about tensions in the Middle East, and this is such a horrific and tragic situation. But coming to the U.S. economy, the first thought is, as you said, what happens to oil, what happens to pump prices and consumer confidence, right? That's a big deal. But the reality is the U.S. right now produces a lot of oil, right? Production has actually hit record highs recently. Petroleum production, Ryan, is at a new record. It hit 22 million barrels per day in August. So that's all products, right? And if you just take crude oil by itself, crude oil production is also close to a pre-pandemic record of 12 million barrels per day. And guess what? The U.S. is no longer actually a net importer of petroleum products. We are actually a net exporter of petroleum products, exporting about 1.7 million barrels per day of petroleum products, right? And that's all products, refined petroleum, all these things, right? But even if you just take crude oil, right, we are importing about 2.5 million barrels per day. Before the pandemic, it was about 3 million. Ryan, back in 2005, we were importing 11 million barrels per day. That's gone down to 2.5. And by the way, most of our imports right now are coming from Canada, not even OPEC. From OPEC, we're importing just about 1 million barrels per day. So it's not a lot, right? And, production's continuing to go up. By the way, you talk about consumption. Consumption has remained more or less steady over the last, really since about 2018. It's been about 20 million barrels per day. It's not really increased above that. So the long and short of it is we're consuming about the same amount we did about 6, 7, 8 years ago, but we are producing a lot more. And even most of the stuff we import, that's from Canada, right? And here's another important dynamic. Crude oil prices over the last, even before this crisis, it's been going up, right?
Sure.
Over the last couple of months, since July and August, really. But what's interesting is gas prices haven't gone up. And that's because refining margins, which make up about 25% of pump prices, that's gone down a lot, right? So gas prices are actually going down, even as crude oil is going up. So that's positive for consumers. That's positive for the economy as well.
Some great points there. We have about a minute to go here to wrap up the latest Take 5. Sonu, one of the at least immediate impacts that we've seen yields finally going down. Now, one of the things you and I have talked a lot about, we've seen a huge surge in yields. I'm not so sure if it's because of the tension in the Middle East. Maybe that's bringing a little bit of a risk-on type of appetite in terms of people finally buying bonds. But how important is that if yields just say like they peak? Finally, they peak because of maybe tension in the Middle East sparking it off. How does that matter for the stock market, you think, here? And you got about 30 seconds.
That's a big break. I think we saw some volatility in August and September. You've done that in your work. I mean, it's not unexpected to see volatility in these months, but yields went up a lot, right? What's interesting is Fed officials over the last few days have come out and said, you know what? The market's sort of done our work for us, right? They've taken long-term interest rates close to 4.5%, 5%. So we may not need to raise rates much more, and I think that's a big positive for the stock market.
No, absolutely. One other potential thing, and we have to wrap this up very soon, is we had a globalization, right? For decades, globalization. Now, after the pandemic and after these tensions, we might be moving away from globalization, which, if you think about it, could potentially cause a little bit higher inflation longer term. One of our themes, but we still see a lot of growth going forward. So with all that, everyone, thank you for being here at the latest Take 5. We'll see you next time. Goodbye.